Hello traders, hope you guys are enjoying your weekend. Now, just for being such amazing souls, I'm releasing another strategy today. Many of you probably know about this. This is the Nfp release that happens once every first Friday of the month. Sometimes it actually does happen on a Tuesday if there happens to be a public holiday or something on that Friday, but don't worry about it. First Friday of every month is the one you're looking for. Um, this is single-handedly the biggest market-moving news release that you will ever see. I'm going to share with you now two strategies, and there's two different ways of trading two currency pairs. Okay, you can certainly do this on other pairs as well. I believe it's slightly more risky in terms of how those pairs come and settle down, and as many of you know, I don't like trading extreme risky, or I don't like trading something that I can't reasonably predict. And so for that reason, I tend to stick with only the Euro USD pair and the Pound USD pair. So what I generally do, I will jump into a 15-minute chart for the both of them. Okay, now I'll start off with the Euro USD one, much simpler. Here's what you want to note, okay? Both the currency pairs, Euro USD and Pound USD, they would move independently of each other. The ending result will always be like a similar looking pattern. So for example, this sort of like a flag that's appearing. Here's the pole, here's the flag itself. Take note, the Pound USD is doing something similar as well. Now, even though they do end up in the same sort of pattern more often than not, how I like to trade both of them is different. So grab a pencil, write this down in your trading book. I always look for and expect that the Euro USD currency pair is going to move somewhere between about 60 to about 80 pips. Generally speaking, I wait for it to hit 70 or above. Okay, the reason for that, it's actually I don't know what the true reason for why that moves that much, but generally speaking, what you're going to find is that the market's going to move either up or down about a good 70 pips. It may not be restricted to one candle. So for example, this one here, this spiked all the way up here and then came back down again. That is a good 50 pips, just that one candle. This one here, which was the initial spike down, that is a good, wow, that's a good 68 pips. So very close to my 70 mark. Generally speaking, this is what I like to do. I won't enter straight away. I would wait for the market to settle a bit to kind of figure out which direction it's going in. Because even the best of traders out there, I know there's a strategy that we used to use back in 2008, and back then, mind you, we had access to some of the bigger bank software that would allow us to sense moves that would happen like every second. We can't really do that with this MT4 retail setups sitting at home through a limited internet. But with that, what we knew was that the market moved, or the banks moved at the 58-second mark. So whatever spike we saw was when we'd actually jump in as well. So within like a second, we'd be able to jump in alongside with the banks, and we'd only be in the market for roughly about 30 seconds. That's something we can't, as retail traders, do here and now. Extremely risky, because by the time you see this move, this spike's probably happened this way. And say for instance, it's already down here, you enter the trade, there's going to be some degree of slippage, and it's guaranteed. There's no way to alleviate that. There will be some degree of slippage, and by the time this candle expires, what you find is you've probably done a put down here, markets pull back up and finished off there. Okay, this is where a lot of forex traders actually do lose money, because they're trying to catch it. For whatever reason, they continue convincing themselves that they can actually do that. Smart money is in letting the market decide for itself what it's going to do, and then you trade a reversal. when I would do it is this. I'd sit back and I'd wait for the market to not only move a good 70 pips, this is Euro USD only, a good 70 pips in one direction, but I want it to start settling and start behaving like this. There's got to be some degree of consolidation happening. The other thing that I'd like to see is where, I don't know if I did discuss this in the other videos, it's the market will always show you wicks in the direction in which it no longer wants to travel. Okay, and then those wicks are not going to be tiny. Those wicks are going to be decent sized ones. So here's what I'm looking for. This is the initial spike. This is at the 8:45 candle, local New York time. This is 9. We'll let this do its thing at 9:15. Sometimes you can start looking for an entry after 9, maybe about from 9:15 to about 9:45. I like to wait sometimes because here's the thing. Market didn't move down 60 pips this way. It didn't actually break past my 70 pip limit that I'm looking for. So I'm sitting and waiting. This really candle is disqualified. This doesn't do anything because here's the starting point, right? I'd like this candle to move above. Now, what we're doing is we're starting to realize that the market is possibly going to move in excess of 70 pips from this point, right? I don't count this one here. Also, I will not count it from this point up. A lot of people do. I don't understand why. So that would be 141 pips. I don't understand why. You won't ever know if the market is going to now bounce back and continue up that way. You won't. So here's what I do. I'd wait for a good 70 pip movement from this point here. So you look at this this doji, this red one here. That's where I'm counting from. So the market pushes down. Even if this was to go down 70 pips, I still wouldn't be taking the trade because I'm waiting for the market to do its actual run for a while before I start to take notice of, okay, this is starting to slow down and then it's going to reverse. See how this is slowing down here? This is market pushes up, pulls back down again, tries to do the same thing. This time around, the wick does break the top of this. The market pulls back down again. Market pushes back up, pulls back down again. Now, when I'm starting to see this behavior, especially after these two candles and markets pulling back down here somewhere, I might consider taking the trade. That's one point at which you can take the trade. The other point at which you could take the trade is this. I like to zoom back and I'm looking to see which direction the market actually has been moving in for the duration of that week. So this is where Friday was, this is Thursday, this is Wednesday, Tuesday, Monday, right? Here's what I look at. I say, okay, from Monday onwards, the market actually moved in one specific direction. And I remember having a Skype session with someone, and I believe we were here somewhere when we were having this conversation. I was saying to him, okay, market actually has moved down for the first few days of the week. I believe this is going to be the actual low of the week, and then market's now going to pull back up again. Once the market is pulling back up again in this direction, and we're heading into, we're heading into NFP Friday, what to me that means is that chances are the market is going to spike in one or two directions, but most likely it's going to head up north. So what I'm doing, these are the mental signals that I'm looking for. I might start even writing this down. So when I'm looking at it, I look at this point here and I'm waiting for at least a 70 pip movement. Now, from that point to here, that's about 73 pips. Okay, when I start seeing this, okay, market has done its thing. It's decided now. It's gone back up. It's hit 60 something pips here. When I start seeing market push past this point, and it has gone into 70 pip mark, or 70 pip plus, on Euro USD, I would consider doing a reversal trade from here. Now, you could do end of day. So look at what the last trading time is on your broker site. Or I'd say at the earliest, you're looking at about 3 p.m. New York time. Okay, so that would be a reversal trade. Again, wait for the spike. You're waiting for at least a 70 pip movement. and then you can do a reversal trade. Here's other ways of coming up with a confirmation is when you're looking at where the market is initially, and then you're looking to see where the other support and resistance points are when you're looking towards the left. So if I'm looking at here, where I'm saying, okay, here's where we are right now. This is prior to the actual release. I will zoom out on a 15-minute chart and then look towards the left. Now, this is not a 70 pip movement. So I'm going to look at a movement going up 70 pips at least. So you can use your crosshairs, hold it down, push it up, and look for 70. See how in the middle there, you're seeing 753. That means it's 75.3 pip movement, right? Now, I draw that line in at about 70. I use my crosshairs to mark it at about 70, and then I'm looking across the screen to see where that mark is, and I see something here. Okay, it's this. For me, is a resistance point now. So what I'll do, I will draw my line in, and can be an average, doesn't have to be right at the tip, can be a bit of an average. Draw my line in and see if there are other lines up here somewhere. I'd look to see if there were ones that are close. I might look at this and say, okay, this point here, market's been bouncing back. I'll draw one in there. Okay, for those of you that are missing it, these ones here. Just an average, somewhere in the middle. I'm in the wick space. Everywhere I'm in the wick space. So, zoom back in. Go back to this point. Now, here's what's happened. Where's this line from? Hold on a second. Okay, I don't know what this line is. Let me get rid of that one. Hold on. Because that can be... Oh, no, actually, sorry. That's the actual price line. That's where the market stopped. Now, here are my two lines that I've drawn in. Okay, that is the resistance point that I'm seeing here. Now, this is the secondary resistance point that I saw here. Okay, so notice that there's one or two reversals there, a couple of reversals there. This is a reversal point. There's 3 points there that was hit, and then there's a couple of points there that's been hit, right? I look at that and I think, okay, key reversal points for me to take note of. So here are my support and resistance lines, all right? Both of them are key resistance for me now. So here's again what I'm doing. I take my crosshairs, I'm at this point here, and I realize that this first line that I'm looking at is at roughly about 58 pips. Okay, now that for me, great, but I'm looking for a better resistance point or entry point for myself. So I'll go one up further. Right, I jump up to here, that's still about 68. And then we go higher than that is when I'm hitting 70. So what that says to me is any point up here or above here is a good reversal point for me to take. Now, even if I've drawn my resistance lines in, guys, see this one, 58 pips, doesn't necessarily mean that I'm going to enter there. It just means that's just an area that I'd start paying attention to what the market's doing, right? Because the key aspect to my strategy is I want to see a minimum of a 70 pip movement with the Euro USD pair. Once it actually has hit the 70 pip mark and gone beyond, is when I would consider doing a reversal trade, either end of day. So here would be a put expiring end of day, or it is a put expiring probably at the least about 3 p.m. You can do this on Nadex as well. Okay, please don't try and do a reversal trade for anything less than about a 70 pip movement, because Euro USD, chances are it will move a good 70 pips. All right. If you would have done an end of day here, that would have been a comfortable win for you. So say for instance this 70 pip mark over here, that would have been a 39 pip win. at about 3 p.m. or so, somewhere around here, that also would have been a comfortable win. This behavior that I'm speaking of, it's very common. So again, write this down. I'm going to repeat it for you one more time. Euro USD pair, you're looking for at least a 70 pip movement before you're going to enter a reversal trade expiring end of day, or at the very least at 3 p.m. New York time. Okay, and then if you then add looking for support and resistance zones like this, you're looking for consolidation to happen like this, that's going to be more of like a signal confirmation for you that market is slowing down and it's doing its thing. I would also wait for a little while for the market to settle. You will always see this sort of behavior happen. And that's going to lead me into the next strategy that we're going to utilize, and I tend to like using that on the pound USD. Okay, now forex traders, for you guys, what I've just explained primarily is to do with binary, but if you do want to take a reversal off of this, you certainly can. Like I said, from here to here is about a 39 pip movement, so you can pick up a decent amount of pips there, but I wouldn't enter on this until I've got all of this confirmed. So this entry would have been, what's this, an hour, roughly about an hour and 45 minutes later. Excuse me. Okay, so hopefully all of you have got that. Please ask questions in the comment section below. Please do specifically ask only in the comment section, that way I can respond, and so everyone else that's having a look at this video can learn from the responses as well. Alrighty, so next one is the pound USD. What you're going to find is that pound USD tends to move more than the Euro USD pair would. So in the previous case, where I would have moved at least or waited for at least a 70 pip movement, in relation to pound USD, I'm looking for a much higher. Personally speaking, I would probably wait for about 100 pip movement, right? But we are not going to trade pound USD in the same way that you would trade Euro JPYs. The reason for this is this. When there's not an infinite, but like a larger degree of movement that you're expecting, whereas Euro USD, you're only looking for a maximum movement about 70 pips. With pound USD, sometimes it can actually skyrocket about 120 pips or so. So if you're trying to do a binary trade, a reversal of that, you can get screwed on that. If you're trying to do a forex trade on that, you could also get screwed on that, especially if I was to do a reversal trade at the 70 pip mark. See how this has actually moved 92 pips from where the spike happened. Now that's a good 22 pips out of the money that I would have been at initially. We don't want to do that. So here's what I do with a pound USD trade. In most cases, I'm looking for an inside bar after the first couple of spikes. So I will wait, generally speaking, about a good 45 minutes, maybe an hour after the actual release has happened. Grab your coffee, sit there, watch the damn thing do its thing. Now, the market will gradually, by the end of the first 45 minutes, select somewhat of a direction. So in this case, spike down, I'd call this a doji, massive spike up, body finishes off here, right? So this is a 45-minute candle, this is the end of the hour, this is the first 15 minutes after 9 a.m. I start paying attention now to what these candles are doing. So especially after the 9:15 mark, pound USD, right? First 45 minutes, watch it. Pound USD. Now I see after this massive movement, I'm seeing this red candle. Here's what I do. I take my horizontal lines. First place I drop it. Now guys, I'm waiting for this candle to finish doing its thing, okay? Let it expire. First thing I do, I drop a line at the bottom of this. And then I take another line and I'm saying, okay, where I'm going to drop that one. Usually I like this being an inside bar, meaning to say that I don't want to wick higher than this point here. But if I do get a wick higher than this point here, then I will possibly then go back to this point and draw a resistance line right at the top of this candle. Right? Again, I want to take safe trades. I don't want to take risky ones. So I draw a resistance line right at the top of this. Here's what we're looking for. We're looking to see and wait for the body of the next couple of candles to break past either this point or this point. Okay? Yes, chances are that what you would have found was that for a large part of this 15-minute period, this candle might have been in the red. Market still pushes up. This one as well. This would have been in the red for, I don't know how long. I didn't watch this yesterday. Market pushes up. The body of this one is much higher than this one and this one once it goes green. Also, what I'm waiting for is it to break past this point. Right? I possibly wouldn't be comfortable with a wick this big, but here's what I'm expecting. I look at the movement from here to about here. That's only a 17 pip movement. When I know the market's going to move at least 85, 90 pips, maybe 110, 120, then what I'm waiting for is a point that gets much higher than this one. So I look at this here and say, okay, that's only about 40 pips. Here's what I can do. I take an entry either here at this point, so let me draw a horizontal line in, or I can take an entry here, because this is what happens in terms of psychology in my head when I'm trading pound USD with Nfp release. First 45 minutes, I believe the market is settling. So the candle from 8:30 to 8:45, 8:45 to 9, and then 9 to 9:15. This is the 9:15 candle. After that, I'm looking for an inside bar. Generally speaking, this is not an inside bar. This is a high bar. But I'm looking for this to be an inside bar. I will draw in a support and resistance lines at the very base of this candle, or at the top of it. So it can be the wick. If this had a wick on the bottom, I would have drawn it on the bottom of the wick. And then I'm looking for price action to break past either this point or this point. Okay, if I wanted to be safe, and realistically speaking, I should be just looking for price action to break past this point. So here for me, right? So I draw a line in here, and I take two possible trades if I wanted to. The first one would be here. Once price breaks past this, I've got a reasonable understanding that once I see an inside bar, followed by whatever the next color candle is, followed by the next candle behaving in this way. So if this one would have broken past here, I could have taken a entry which would have been a call, or a long trade for Forex going in that direction, right? If this would have been a red candle that would have constantly been here and it closed off down here somewhere, I would have most likely taken a put trade going in this way, or a short. So again, two options. I don't want to confuse you guys. I'm starting to confuse myself. Entry here, which would be confusing for you guys, because when you'd note, both these candles would have at some point been a red one, right? So if you want to be careful, where you would have done the entry would have been somewhere here, straight after this point. All right? The entry and expiry should be, try and get in as soon as you can, but the expiry should realistically be end of day or at about 3 p.m. You will generally be in the money with that one. Negatives on this one, and this is where this one's throwing me off, is that the wick on this is too long. Way too long for my liking. I would want this to be a lot smaller so I can take a better entry. and where I've drawn this resistance line is not normally where I would have drawn it. I'd like for this wick to be either here or like an inside bar somewhere down here, so that I could have drawn a wick here, a wick, a line here and a line here, and then once one of these candles breaks past that line, that to me is an indication that the market has now selected that it's going to move in that direction. Don't ask me why, but pound and euro kind of behave this way on a regular basis. I don't know why. It does. I've tried to figure it out. Once I do figure it out, I will let you know. But generally speaking, it's safer to do a reversal, expiry end of day or 3 p.m. on Euro USD. And in this case, you're always looking for like an inside bar setup and then market movement in one direction. Another way of looking at it is to say market will give you a fake out. It will do something like a reversal for a brief moment. And then what I'm looking for realistically is some degree of consolidation. And when I'm seeing that consolidation, I'm waiting for the market to give me an indication of which direction it's going to head in. This one is a massive green candle. Besides this here, this would have thrown me off. Simply because once the candle moves that much, I'm now confused as to how long, what the duration of my trade will be. For Forex purposes, I possibly would have just jumped in somewhere here straight after the market went up past this point. But if I waited for this to expire, I'd be looking at a movement from this point of about, say, 63 pips already. So I probably would have said, and this is me doing mental calculations, to say, okay, from this point on, I'm expecting possibly like a 100 pip movement. All right, say that's the 100 pip movement up there. Then from that 100 pip movement, what I'm looking for is possibly half of that where the market settles back down again. So we're looking for a place where there's 50 pips. Okay, it's 50 is roughly there. So I would draw a line in somewhere around here to say that if the market spikes up to about 100 pips from this point here, then I'm expecting the market to come and settle back down somewhere close to my 50 pip mark. So again, it's this one here. Okay, so here's where I'm looking at the market settling. Notice how market bounced back over here. I didn't deliberately draw that line in there. That's 50 pip count from that mark. Okay, so here's the thing. Again, if I'm looking for a 100 pip movement and I'm looking for the market to come back and settle down at about 50 pips from there to here, then and if I'm noticing that the market here has moved up in this candle by 65 pips, and you see this movement here, it's already gone past the 50 pip mark, that's a risky trade to take. Don't take it. Okay, so again, you want to take your trades quite low when it comes to this, because this is a continuation trade, whereas for Euro USD, it's a reversal trade. All right, I hope that makes sense to you guys. I'm just going to give you a quick brief on that again. So Euro USD, what you're looking for is the market to maybe net a 70 pip movement in one direction. Once you've seen that 70 pip movement and you're based on the trend that the week has been going in throughout the week, or from probably about Tuesday or Wednesday, you're looking for a 70 pip movement in that direction after the news release. Then you're looking for support and resistance lines that will corroborate with your 70 pip movement. And as soon as you see something of that nature there, wait for the market to hit past your support and resistance lines, hit the 70 pip movement mark, and then you take a reversal trade end of day or expiring 3 p.m. Pound USD, again, slightly different. You wait for at least a good 45 minutes for the market to start consolidating a little bit like this. Once you've seen that slight movement back in consolidation, draw in your support resistance lines around that. Again, this is a little bit tricky because this wick is too long and so is this green candle. How I would do again with pound USD, I'm expecting a 100 pip move minimum. When I've seen that 100 pip move mark, I'll draw a line in somewhere up here, calculator, or somewhere down here, and then I would also mark a 50 pip move mark, right? So if I see a movement in, like, so for example, like an inside bar, and then I've got a line drawn in up the top, at the bottom, I'm waiting for the next candles to break past either the top of that or the bottom of that. Once the candles have broken past sufficiently and I'm comfortable with the movement in that direction, then for me, it's to say the market has decided the movement will continue, right? If by the time you're going to enter the trade, the market has already moved at least from this point on to here by 50 pips, abort that trade. Okay? Because when you're doing either Forex or binary, in this case, you don't know at what point the market will bounce back. Where is it going to peak, and then at what point is it going to come back down and then consolidate, right? 50 pips, the movement is way too long for you. Anything below 50 pips is still decent. And the reason for that is, especially like after this, the reason for that is because we're expecting that the consolidation will come back and happen at least 50 pips from the point of movement and 50 pips from the peak, right? Now, when I'm talking about that 100 pip movement, I'm talking about a minimum there when it comes to pound USD. All right, so look at it that way. You could possibly get some nice trades in this way. Forex traders, you guys know what you're doing and you know when to enter. Certainly don't enter at the spikes initially. Wait for a little while. Again, grab your coffee. Be as patient as you possibly can. Look for signs of consolidation. It's always going to come, but trade it that way. Again, questions down below, and we'll try and rectify whatever confusion that I might have set into your head with that explanation. So all the best with it. Add this to your arsenal. That's 12 or 24 possible trades throughout the year. Okay, I love doing more of these with Forex than I do binary, simply because I don't like too many long-term ones, but certainly something you can play with and experiment with. Notice whatever you can. Observation is always key to trading. Write it all down and then see if you can utilize whatever observations you've made for better trades down the track. Alrighty, all the best guys. Enjoy your weekend.